Stock market crash? Question mark, question mark. All right, what is up, guys? I'm back with another video. Today we're going to talk about what the heck took place in the market today. As you saw, it was pretty red. Everything was down. Stocks were down. Bonds were down. Everything was down. So we're going to go over what happened in the market, why everything is down, and what we're going to do about it. They were down roughly 3%. It's pretty significant for just one day. If we go to SPY was down just about 3% in one day. The reason for this large drop is we did have the FOMC, which is the Fed meeting that they had on today, Wednesday, where they cut interest rates by 0.25 basis points. And for those that don't know what that means, is the Fed's lowered interest rates, and the market usually reacts, if you remember from last video, can react positively or negatively to ups and downs of interest rates. Today we had Jerome Powell speaking. He told us that we're cutting interest rates, which was to be expected. Everyone did expect this if anyone follows the market. So it wasn't any new data that came in. It just, they actually took the, they actually solidified it. But as you can see, the market reacted badly to it. Down 3%, everything was down pretty much. But this is to be expected. This is perfect because you get to see the ups and downs of the market, and your emotions can play a big part in your investing journey. Most people, if they see stocks are down like this, they in their head, they take it, okay, I'm losing my money, I'm going to sell. And that's what most people do, and that's why stocks are down, because most people sell their positions. Now, if you follow the market, prices for stocks is just going up and up and up. And I do think it was due for a pullback or a cool down. Now, I'm not saying this is a stock market crash, but the way stocks were running, if we go to SPY, let's take a look. We're up 24% year to date. So as you can see, stocks have just been going up and up and up and up. All the talks are about AI. You got the semiconductor stocks. It's been propping up the market, causing things to skyrocket. So a day like today, where the interest rates were cut, the reacted pretty negatively towards it. And this is what caused the drop of about 2-3%. I don't want you to get afraid of when the market pulls back like this. I want for you to look at it as an opportunity to get a stock that was previously at a higher price at a much lower price. For instance, if we look at Vertiv, this last month the stock was sitting at $144 per share. Now it's currently sitting at $114. So it's at a much lower price for you to invest in, buy into. And that's how I kind of want you to view the entire market. If the stocks you invest in are good companies, you will still continue to see their value during the down days like this. If we look at Meta is down $21 today, but it's still a great company even though it's down. It's still a great company to invest in and to hold for a long term. In a lot of cases, you find that history repeats itself. We have cycles like this where the market runs, and then we have cycles where the market pulls back. We have inflationary times, and then we have times where inflation is at a much lower 2% range. The Fed decisions today to cut interest rates was based on previous data that they received that inflation is still running a bit too high, and we are starting to see a acceleration in the uptick of inflation, meaning inflation is beginning to go back up. For those that don't know, in simple terms, when inflation runs high, the Fed, they would increase interest rates to help fight inflation, to bring inflation back down to a much lower rate. Things are going up, groceries, gas, rents, everything is going up. The only way to fight that is to increase interest rates. That's basically what happened today. Now, the market did react negatively towards it. I think people are starting to realize that the Feds have been inconsistent with their plan, and they have been changing as they go. And a lot of their game plan just don't really make sense. So that paired with the market running way too hot, it was due for some type of cool off. So yes, we're down 3% for today. I just want to give a quick update. Normally in December, we get what's called a Santa rally or a stock market rally. Usually from previous data and history, we usually get a run. 80% of the time, December is usually a good month for stocks, and they usually go up. But this doesn't seem to be the case as we head towards the middle of December. We still have time left in the month, so we'll see how it plays out. But for now, I just want to give a quick update on this and show what moves we are making and what we're looking forward to. This was a big day for the stock market, and if you're wondering why the market is down, that's why.